Synchronized 10, 9, 8, 7, 6, 5, 4, 3, ignition.
Before you look at the stock chart, look at this. This is not just another rocket launch. On Starship Flight 1-2, SpaceX deployed 20 Starlink simulators and 2 modified Starlink satellites. Then those satellites turned around and filmed Starship from space. That changes the meaning of the test. SpaceX is not only proving that it can launch a giant rocket, it is trying to prove that Starship can deploy the next generation of Starlink payloads, and that those payloads can help inspect the vehicle itself while it is still flying. In other words, the company is not selling Wall Street a simple rocket story. It is selling a vertically integrated system. Launch, satellite internet, AI infrastructure, and eventually lunar and Martian transportation. So the real question around tonight's IPO is not just whether the stock pops on day one. The real question is whether investors are willing to pay roughly $1.77 trillion for the cost curve of getting to orbit. Let's make the story clear. SpaceX's first moat was reusability. For decades, rockets were treated like extremely expensive disposable machines. You launched them once, and most of the hardware was gone. Falcon 9 changed that. The booster comes back, lands, gets inspected, and flies again. That is not a stunt. That is a change in the cost structure of space. In SpaceX's own roadshow materials, the company says that since 2023, it has carried more than 80% of the global mass sent to orbit. It lists around 650 total launches, a 95% vehicle reflight rate, and 78 crew members flown since 2020. Those numbers point to an industrial machine, not a one-time spectacle. But the reason the market is repricing SpaceX now is Starship. In October 2024, during Starship's 5th flight test, the Super Heavy booster did not land in the ocean. It did not land on a drone ship. It returned to the launch tower and was caught by the tower arms. If you only see that as a cool clip, you miss the point. A booster caught at the launch site starts to look less like an expendable rocket and more like an aircraft. Launch, return, inspect, refly. Then Flight 1-2 pushed the story forward. Starship was not just flying, it was demonstrating what its commercial future is supposed to look like, deploying Starlink-class payloads at scale. That is the first big logic of the IPO. Falcon 9 is the cash engine of today. Starship is the capacity multiplier of the future. Why does Starship matter so much to Starlink? Because the next generation of Starlink satellites is larger, heavier, and more demanding. Falcon 9 is powerful, but it has a fairing and payload limit. If Starship matures, each mission can carry more capacity, lower the cost per deployed unit, and upgrade the global network faster. SpaceX's own materials say Starlink had about 10.3 million subscribers by the first quarter of 2026, service in 164 countries and markets, coverage for more than 3.3 billion people, and more than 9,600 satellites in orbit. This is not a concept business anymore. It is already the largest low Earth orbit satellite broadband network. So when you watch a launch, you are also watching network infrastructure being built. Every rocket is not just leaving the atmosphere. It is laying another layer of bandwidth around the planet. Now look at the IPO. The offering price is $135 per share. SpaceX is offering 555,555,555 Class A shares. The base raise is about $75 billion, and the implied valuation is roughly $1.77 trillion. The ticker is SPCX. That is an extraordinary size for a public debut. Retail access is unusual too. Fidelity says customers with at least $2,000 in a retail brokerage account may be eligible, and that SpaceX reserved up to 30% of the offering for retail clients. A typical IPO usually reserves only about 5 to 10% for retail. That is why this suddenly feels like ordinary investors are standing at the entrance to a mega IPO that would normally be walled off. But an open door does not mean there is no risk on the other side. Fidelity also says that if allocated investors sell within the first 15 calendar days after trading begins, that can be considered flipping and may restrict future IPO participation. The first occurrence can restrict you for 6 months, the second for 1 year, and the third can make the restriction permanent, tracked by Social Security number. That does not mean the IPO is uninvestable. It means this is not a normal click-in, click-out trade. Now let's talk valuation. SpaceX's roadshow materials list 2025 revenue at $18.7 billion, up 33%, at a $1.77 trillion valuation that is roughly 95 times sales. 95 times revenue means the market is not pricing only the SpaceX that exists today. It is pricing years of future Starlink growth, future Starship execution, AI infrastructure, and even the far more speculative lunar and Mars roadmap. The bull case is simple but powerful. SpaceX has three rare curves at once: reusable launch at industrial scale, a fast-growing satellite internet network, and Starship as a potential cost breakthrough. If you believe orbit becomes a new layer of cloud, communications, defense, and compute infrastructure, SpaceX is one of the rarest gateways into that future. But the bear case is just as important. A $1.77 trillion starting point leaves very little room for disappointment. Starship is still in testing. Full reuse, orbital refueling, and routine commercial Starship launches are not yet everyday operations. The company is still in a heavy investment cycle, especially around Starship and AI infrastructure. And a hot first trading day is not the same thing as a good long-term return. Reddit discussions show the split clearly. One side says, "I don't want to miss SpaceX." The other says, "At this valuation it feels too close to gambling and I would rather watch from the sidelines." Both reactions are understandable. So the better conclusion is not buy or don't buy. The better framework is three questions. First, what curve are you buying? If you are buying a one-day pop, you are trading liquidity, sentiment, allocation rules, and opening volatility. If you are buying a 10-year orbital infrastructure thesis, you have to accept brutal swings along the way. Second, can you set a position limit? Even a great company can become a bad investment if the position is too large or the entry price assumes perfection. A mega valuation IPO is usually better treated as a measured exposure, not an all-in moment. Third, are you willing to wait for price discovery? The first day, first week, and first few months after an IPO are often dominated by emotion. Letting the market show a real trading range can be more rational than fighting for the first ticket. Whether you buy or not, one thing is clear: this IPO is not only about one company going public. It puts three questions on the same screen. Can the cost of reaching orbit keep falling? Can satellite broadband become a next-generation global infrastructure layer? And will public markets pay in advance for a space economy that is still being built? So remember the first image. Starship deploys its payload, and the payload films Starship from space. That is not just a promotional shot. It is the future SpaceX wants the market to believe in. Launch as a repeatable, scalable, monetizable system. If that system works, $1.77 trillion may one day look early. If it does not, tonight's excitement will become a very expensive price tag on imagination. Before investing, do not only watch the rocket rise. Look carefully at what you are buying: the proven engine of today, or the future that is still on the test stand.